We're live on the YouTube.
That's the cheer of the millions and millions of the fans. And the crowd goes wild.
And they're going wild right now.
It is Friday.
Friday.
You know what that means?
What?
You eat fries today. French fries. Some people call those potatoes, but they're not.
I reckon I like them French fries.
They're no longer potatoes, guys. They're no longer nutritious. I'm sorry to tell you, but anywho, you're here at Chris and Lee Live. We're here to answer your home loan questions, your real estate questions, your should I sell, should I buy, should I refinance, what are interest rates, what do you predict in the near future? I'm a first-time home buyer. What credit score do I need? So all those questions that you guys may have about buying a piece of America,
Royalty
we want to help.
Royalty Women. Love the name. Royalty Women. What's up, Royalty Women in the house? Angel, Blue Age, Oscar Madrill. Thank you guys for showing up. Freddie G, we're here to teach you how to get a house in 2024. Want to know what today's interest rates are? We're going to cover that. Want to know whether or not you should buy. Do you have a complicated scenario that you need help with because you have a loan officer that you don't know what they're doing? Ask us the question. We'll tell you. You want to know what the rates are? We'll tell you. You want to know whether or not down payment assistance programs
Jessica
are good for you?
Damon,
We'll tell you.
Sata, Momo, Tracy, Arturo, Bronx, Alum. All right, guys, start it off. If not, we will. What are today's rates?
All right,
hate
so
that
5.625. New Market Funding is saying right now 5.625 on a 15-year fix, 5.625, and 5.75 on a 30-year FHA, 5.75.
Hey, man, while we're here, tell me about those Band-Aids.
Okay, so this is the newest conspiracy theory.
I
that
haven't
I'm
heard
going
this
down.
yet.
Yeah,
I haven't heard this yet.
it's the newest conspiracy theory, guys. If you listen, if you watch, you know I think the whole world's a scam, including the loan business, including insurance, including everything. Coffee. Dude, coffee's a scam too. Coffee's a scam. But, so, the newest thing. Hey, they're lacing Band-Aid brand with chemicals that will go directly into your bloodstream. And we are literally paying people to put the chemicals. Oh my God. I just found out about this. Oh my God. There was like 15 different brands that came up. Costco came up. Amazon brand came up. Band-Aid was at the top. All of these things. And the chemical is going directly into your bloodstream. What in earth is going on?
Zadie in the house.
580 enough. And maybe. So, FHA guideline says if you have a 580 FICO score, we can move forward on an FHA 3.5% down. Here's the catch with an FHA for the real world. This is the real world. So you did something to create that FHA 580. Not FHA, FICO 580. You did something. And if it was last month, you're not going to get a house. Not today anyway, not right away. I had somebody that I pulled a credit score on, and it was 584. And they said, hey, cool, 584. I'm like, yeah, that's awesome. It makes the limit. And I say, okay, cool. I've got 5 line items that are showing derogatory last month. So let's go through them. Are they accurate? Yes, that's accurate. Yes, that's accurate. Yes, that's accurate. Yes, that's accurate. And I said, hey, if you have 5 derogatory items last month, do you honestly think a bank's going to give you a new loan this month? I mean, seriously, do you? And the answer is no, they're not.
What's up, Drone
They're
Skywalker?
not. What's up, Drone Sky? I like the name.
So,
Drone
Zadie,
Skywalker.
you're saying that it was your divorce. Okay, I've never been divorced. I never made that mistake of getting married.
Mm-hmm.
So, why? Why does a divorce cause?
of getting married?
Dude, I'm. Yeah.
You think there was a scam too, huh?
Listen. So why does the divorce lower the credit? Like, what happens? Do you guys stop paying bills because you're mad at each other? Like, what happens here?
I'm not gonna pay for that car. You pay for that car. Oh,
Oh,
yeah,
is that
that's
what it is?
I don't
so
know.
they're fighting over who's it?
I don't know, but most of we all. I mean, how many bad divorce stories have you heard?
All of them? I've not heard of one good divorce. Not one.
I heard one thing, dude. You got one job, bro. One job, and you messed up that one job. We're about to go silent for a second because he didn't put D&D on our phones, and we're gonna get 1,000 million phone calls during the process. and he's got one job, put D&D on. It didn't happen. Okay. So one of the people that I look up to says, hey, the person you married is not the same person you divorced. What? Yeah, it's different. It's different. The person you married is not the same person you divorced. So the divorce has ramifications moving forward. Now, we look at it from a mortgage perspective because if there's alimony or child support, we either got to deduct it or add it. One of the two. And it has to be court ordered. It can't be what we just came up with. If we get that a lot. Hey, well, baby daddy gives me $2,000 a month. Okay, cool. Is that court ordered? Show it to me. No, it's just what we came up with. Can't use it. Why? Because there's no legal binding anything. Baby daddy could just say, nah, I don't want to do that no more. And it's over. So when we use it for income, we have to actually prove that it has income. That is income and court ordered.
Yes. And also, guys, I just found out FHA won't allow legal separation. I remember back in the day that they did. Maybe I'm remembering that incorrectly. But today, even if you have a court legal separation, does not work. Divorce must be a full divorce if you don't want to include the spouse. That's only if you live in a community property state like California.
Yep. Recommendations on addressing derogatory charge-off accounts. I'm disputing, but anything else. Okay, so drone, Skywalker. Drone.
D-money.
Depends on what you want. Now, let's just say you owe $2,000, okay, and you're disputing it. But you call them up and you say, hey, listen, I'll give you $1,000 as long as you give me a pay-for-delete letter.
Ooh.
Pay-for-delete letter. Wait, pay-for-delete letter? Pay-for-delete letter? Yes. And I need it in writing, not just on the phone. So they say, tell you what, if you can pay us within the next 24 hours, we'll give you the pay-for-delete letter. Now, that will delete it off of your credit. It's gone. It was never there. Gone. So that's one recommendation. I got to know where you're at in the process to give you any more. Can I get a house with an ITIN? Real simple answer. Yes. Riri says, nice shirt. I appreciate you. You know what? A lot of people hate my shirts. I don't know why. I don't know. He hates my shirts. But I get comments on my videos all the time. We got like 60,000 followers. And there's some people going, hey, your shirt sucks. And I'm like, wow.
The fact that they take the time out of their day to do that is what blows my mind. I have a lot of time to shoot at them. But you guys don't. Don't waste your time.
Thank you, Riri. I appreciate you very, very much. Very much. So what can we do to help you get a house?
All right. Do you think a 5-1 ARM is a good loan in the current market?
So what do you think? Give me your honest opinion on a 5-1. I'll give you mine.
No. I'm going to say no.
Why?
I'm going to say no. Well, number one, ARMs aren't much better on pricing. Okay, they are just not much better on pricing. So if they're not much better, they're slightly better, and that thing starts creeping up, and the rates start coming down, you're going to be pissed off. You're going to be very upset at yourself.
What is a 5-1 ARM?
So a 5-1 ARM is an adjustable rate mortgage. It's going to be fixed for the first 5 years.
Fixed for 5?
5, and then after the fact, it'll adjust up about a max of 1% per year. Now, ARMs are not attractive right now. There's not a whole bunch of people that are going with them, so I'm going to say no. Yeah. What do you say?
Well, 5-1 ARM, I think, is a very bad move at the moment.
Very bad move.
Yeah, for most. Not for everybody. Okay. Occasionally there's Here's why. Because this is what the Federal Reserve is putting out. The Federal Reserve says, hey, prime interest rates are right now 5.25 to 5.5, and that's all 12 members right there. Over 25 and 26 and into 27, they all hit a consensus around 2.5% interest rate. Well, 27 is only 3 years away. 3 years away. So what does that mean? In the next 3 years, interest rates are going to go down by some of the smartest people in the world that actually dictate the economy. Not some guy who works for CNN or ABC or Fox News or whatever. Not one of those guys. The guys that work for the economy, the chairman of the Federal Reserve and the Federal Reserve Board, all believe that we should be at 2.5 in the next 3 years. Okay, cool. So what does that mean? Interest rates are going down over the next 3 years. Well, 5-1 ARM is exactly that. It locks in for 5 years. So let's just say you get 6.5 on a 5-year arm right now. You're guaranteed 6.5 for the next 5 years. And then, hey, it'll adjust down. But in the meantime, the rest of the market has gone down. And you're like, wait, I don't want to pay 6.5. Everybody's at 5. Everybody's at 4.75. Everybody's at 4.5. Everybody's at 4. I'm still at 6.5. I don't think it's a good idea for most people.
Yeah, and regardless, you're going to refinance.
Yes.
You're going to refinance. And if nothing happens, okay, if nothing happens and the interest rates don't move, at least you'll be where you're at and not climbing while everyone else isn't, okay? So that's just the thought. People be hating, said Riri.
I know, they be hating. They be hating. They be hating.
Lumbrellas. Under my lumbrellas.
What tricks have you got? Well, we got a lot of tricks, man. We got a lot of tricks. First, the best trick for credit score. Here's a credit score hack. You're going to love this one. Love this one. Love this one. Hey, credit score is based off of some very important things. Most important, time and service. How long have you had that debt? So if you had the debt 10 years, well, that's very important. Very important. Like one of the most important things. So what do? You have a credit card for 10 years. How do I do that? How can I get a credit card that I've had for 10 years? You go, hey, mom, dad, uncle, cousin, best friend. Hey, you know that credit card that you've had for 30 years and you have an 800 FICO score? Can you add me as an owner or an authorized user? Owner better, authorized user second best. If you add me as an owner or authorized user, I instantly inherit the 10 years. And everything was paid on time. Credit doesn't have a memory. It doesn't remember you didn't have it last month. When I pull it, if it's there, it's there. Now the mother, father, cousin, whatever, best friend, they're going to go, well, wait a minute, what are you going to do with this credit card? You're like, you could have the credit card. You could shred it the minute it comes in. I don't care. I just need the credit history. And boom, 50 points, 60 points, like that.
Okay, guys, I'm not good at this, but I want you guys to help me, okay? So up top we have looks like 5 likes. I want to try to get that thing over 1,000. So help me if you can just tap the likes, share the video. Let's get into the algorithm because the more people that come into this room, the more questions they ask, the more answers you guys get. So it's beneficial for the whole community. So if you give me a bunch of likes, give me a bunch of hearts, give me a bunch of shares if you can.
A realtor in Miami. I love Miami.
Here they come.
You
guys are awesome.
Miami. I love Miami. Love it.
Awesome. Thank you.
I lived in South Beach for a while. Loved it. Loved Miami. Loved Miami.
Okay, we've heard that 100 times.
Okay, cool.
One more time.
Love Miami.
Okay. Josefino, break it down for me, man. They want to know about I-10.
How can I get an I-10? Okay, so here's the one thing that most people do not like, and it's just the truth of it. 20% down. I lose most people right there. 20% down. 20%. Well, can I do? No. Can I do? No, you can't do less. Well, what if I have a cosigner who's FHA? Doesn't matter.
No.
20% down.
Dude, it's at 746.
20% down. 20% down.
Keep going, guys.
20%. What's 746?
Dude, it was at 5.
Oh, got it. Somebody's locking this up.
800.
Somebody's locking this up.
No.
I appreciate you.
Let's get that thing to 2,000, guys. Yeah.
So I-10, we actually pull your credit I-10. And because you're I-10, it's a special loan. Doable? Yes. 20% down. It sometimes a very small percentage, 15% down. Very small percentage, 15% down. But 20% down. If you want to know more, let me know.
20% down? That's a lot of money, though.
That is a lot of money.
I heard it's only 3.5% down.
It is for FHA, but not for I-10.
Oh. All right. So, Lumbrellas. That's a good trick. Thanks.
Yep. We got a lot more tricks. We got a lot of tricks.
We got you, man.
We got you.
We got
you.
Z,
cool.
Zero down home loans. Isn't that the 2008 crash happened? Isn't that
why? Kinda Z. You sound like a conspiracy theorist, and I love you for it. I do. I love you for it. But here's what happened in 2008. In 2008, there was no barrier to entry. Anybody could be a loan officer. All you had to do is leave your job at Starbucks, put on a loan officer hat, and you're a loan officer. You didn't have to pass a test. You didn't have to go anywhere. All you had to do was call yourself a loan officer. That was a problem because you didn't know if somebody was lying to you. And they had what's called ninja loans. No job, no income, no assets. But they would lie. They would just lie. No shit. They would lie. And because they lied, the banks would go, hey, I'm making a lot of money. So if you said it, it must be true. If you said it must be true. Everybody said it must be true. And then everything collapsed. The way they addressed that was Dodd-Frank. Dodd-Frank's this big law that passed that says, okay, there's a barrier to entry. And now the barrier to entry, first step is us. We're loan officers, licensed loan officers, 944-254.
106-6958.
That was for legal reasons, and that's part of Dodd-Frank. Dodd-Frank says I have to identify myself. Why? Well, because I'm a licensed loan officer and I'm going to have access to your credit, your income, your everything about you. I'm going to know everything about you because I'm going to help vet to make sure that you can get a loan. That's going to happen. Where you at?
2,100.
Dude, you did it.
You guys are badass.
You guys
Keep
are
going.
badass.
Likes, shares.
So Dodd-Frank happened, and then there's a lot of layers at Dodd-Frank. We're the first layer. We're the entry layer, and I have to identify myself. And I do all the time because that's part of the law. Then I pass a loan off. After I pass it off to a processor, I can't touch it anymore. I'm done. They literally take away the power for me to change income, change plans, change anything because it goes to a processor. The processor has a number, a license number. And then after the processor gets it, it goes to an underwriter. The underwriter has a license number. We are all licensed and we have to go through FBI background checks. Every year I have to go through continuing education in order to make this happen. So what does that say? That all says that the people that are in homes for the last 10 to 12 years, they deserve to be in that home. They're not going to fall apart like it did back then.
Yep, got a lot of questions, guys.
Cool.
We're going to get to every single one of you, so hang tight. Luna and Bagheera, if I have a credit company automatically raises your limit, does that affect your score?
Sometimes, yeah. In fact, that's a very good hack. Here's the hack. It's hilarious. Okay, you should be running at about 30% of your usage. So let's say you have a $5,000 credit card. Okay, $5,000 credit card, and you have $3,000 usage. Well, you're roughly 60 to 70% usage. That's too much. So there's two things you can do. You can either write a check and bring it down, or you can call them up and say, hey, can I get that raised to 10,000? And they say, well, we're going to run your credit, but maybe we can. And then, yup, you qualify. You have a new credit limit of 10,000. So your credit limit is 10,000, but you owe 3,000. So now it's 30%. That's a little hack. You can do that.
Boom, love it. Daily sports clips. Are these guys a couple? They look beautiful together.
Ah, dude,
Hey,
here
man,
we go.
The
Here
sex
we go.
appeal is just
Dude,
shining.
all right. I appreciate you, Daily Sports
Yeah.
Clips. We appreciate you
Riri.
very much.
Can you get approved for anything without needing good credit, etc. if you have the 20% cash?
No. No.
I disagree.
Okay, tell me why.
I'm gonna disagree.
Well, DSCR, maybe.
Because our minimum credit score for minimum down payment is 3.5%.
Well, it depends what you mean by
But-
good credit.
Yeah, that's
If you
relative.
have a
That's
420,
relative.
if you have a 480 FICO,
Yeah, you're out of the market. But
Yeah.
if you're in the 500s
Yeah.
and you have 20%, then your chances do increase.
Yeah,
But he's
yeah.
right. If you're too low, you're
yeah,
too low.
that's what I was thinking. I'm thinking 380 FICO, 420
Yeah,
FICO.
what are you talking, Riri? Give us a
Yeah,
number.
you got to give us a number.
Riri, onions and garlic, thank you for the follow.
Appreciate you
Hi,
guys.
guys. I love watching your lives. So informative.
AW, we appreciate you. Did you do the heart? I don't know how to do the heart. So, AW, we appreciate you. Hey, by the way, if you guys are loan officers or realtors, we really like you on the feed. Even if you're shooting at us, shoot at us. We got thick skins. We've been doing this for a while. Come at us. Let's go. Let's figure out how to get people a house in 2024.
Lumbarellas, is it easier to buy a house that you will use as a rental rather than live in it?
No, way no. Did I say no?
Way no.
I said way no. Here's why.
Not no way.
Yeah, here's way no. Here's way no. Bueno.
Muchos gracias.
Órale. Okay, back off. We can't do that. I'm gonna get banned. Okay, so here's why. If you're living in a house, so you bring in your husband, wife, 2.3 kids, and dog. Okay, so now everybody's in the house, and then things get tough. It's not so easy to walk away from that because the husband, wife, 2.3 kids, and the dog all live there, and they go to the school district, and the dog goes to this dog pound and everything. So there's a big life infrastructure there. That's your primary residence. Because of that, the loans favor primary residence. Well, let's say you have a rental and your renter just says, screw you, I'm squatting, I'm not paying you anything, and now you're in trouble. But it's not going to hurt your primary residence. So you could just say, nah, peace out, I don't want to deal with that. Because of that, the banks factor that in, and they say, hey, listen, if you want to buy a rental property, 20% down, you got to have higher FICO scores and more money in the bank. If you're buying your primary residence where you're going to live with your husband, wife, 2 kids, and 2.3 dogs, 2.3 kids and a dog, well, then they lax the guidelines just a little bit, and they say, okay, listen, you can get away with 3.5% down, sometimes 0 down, sometimes, but 3.5% down, and sometimes only 1 month reserve. Insane.
Yeah, look at the likes. Almost 3,000
Dude,
Lumbrellas.
Lumbero. Lumbero.
Was that you, Lumbrellas?
Was
that
dig
you?
You're badass.
We are at 3,000.
Dude, you're badass. I don't even know what that means, but you're making this guy excited
I don't
as
either.
hell.
But
He's
it's
like, yay!
No.
I have no idea what it means.
I watched TikTokers,
I have no idea.
a TikToker
Yeah?
2-3 nights ago, and he's like, "Hey, let's get these numbers up." And I'm like, "I don't know what it does. Let's see if we can."
I thought it was viewers. I don't know what we're aiming for. I know we're on Instagram. We get these balloons and shit like that, and for some reason, a thumbs down comes up all the time. I don't understand. You know the thumbs down shows up on Instagram,
Yeah,
right?
it does.
You said it's because of that, and it might be because of that.
Well, when you do this.
Yeah, I can't. But anyway, on TikTok, it's hilarious because you'll throw a mustache or a hat on this guy. We appreciate all of that. On Facebook, kind of boring. Not a whole lot going on. YouTube, nothing. Crickets. There's no way. Yeah.
All right, Mammy of Zero. Have a great weekend, mortgage
We
guys.
appreciate you, Mammy
You
of Zero.
too.
We always like seeing
Always
you
have
show
a great
up.
weekend.
Yeah.
Question, said Marissa, if I have a lease, does it affect to apply for a mortgage loan or doesn't?
Yes, it's one of the worst. Why is it the worst? That's a very deep question, and I'm glad you asked, Marissa.
I'm confused.
Yeah, here's why. Because let's say you bought yourself a Toyota Highlander, okay? And you bought that Toyota Highlander 5 years
auto
ago.
lease.
5 years ago. 5 years ago. Okay? So you bought that 5 years ago, and you're 10 months left to pay off. You got about $8,000 left, 10 payments left. And it's an installment loan, which means there's an end. Installment loan. Well, if you have 10 months left, I can ignore it. I can say, hey, this is an installment loan. I know it's $900 a month. I know it is. But I want to ignore it, Mr. Underwriter. And they say, well, let's make sure it's an installment loan. Hey, it is. $900. I can ignore it. Awesome. Now let me flip that. It's a lease. I got 9 months left. Hey, Mr. Underwriter, I'd like to ignore that. Underwriter says, can't do that. Can't do that. At the end of installment loan, that guy owns the car. At the end of the lease, they still need a car. And we have to assume it's going to cost at least that much.
Yeah.
So a lease can hurt.
So I thought she meant a lease like she leased an apartment. Yeah. So is it auto lease, or are we talking about a lease where you live? Let's clarify
good
that.
Point. Do you guys work with UWM? Do we work with UWM?
Two-part question, actually.
Okay, cool.
Do you work with UWM, and what do you make of the UWM news?
Oh,
well, the CEO,
I love that shit, man. That's crazy
sent
shit.
a crazy email the other day. Did you read it?
I did.
Okay.
It's crazy shit. One of our viewers actually sent it to me, like, just personally said, hey, take a look at this. I was like, yeah, that's pretty good shit.
Intense. It was very Wolf of Wall Street. Very Wolf of Wall Street. I actually think he copied him, and he's trying to go for that same thing. It's a little rubbed me a little bit wrong, but I do understand the idea behind it. What state are you in? Ask Riri.
Do we work with UWM?
No.
We don't work with UWM. We are a direct lender. New American Funding is a direct lender, and we do have broker lines. Now, what a broker line means is we go to somebody that offers money, like Wells Fargo, and we say, hey, listen, we'd like to do $100 million worth of loans this month. Can we get a line of credit to do the loans under your guidelines, which are Fannie Mae, Freddie Mac, VA, FHA. So Wells Fargo says, well, you know what? There's some profit in this for me. So yes, I will give you a line. So we can broker to Wells Fargo. We can broker to Freedom. UWM is one of those, but UWM is usually for the straight brokers. Those are the guys who are not a direct lender. We are a direct lender, so we go with our direct line first, and usually it's the best. But occasionally we'll get one like AmeriHome for some reason is beating everybody on VA right now. VA?
All the gubbies. Actually, I picked one up on conventional yesterday.
Yeah? Mm-hmm. So AmeriHome, right? AmeriHome. Yep. So we broker and we do the pricing, and where it boils down to is when it's time to price the loan, I say, cool, New American Funding is at pricing at 6.5, but it's going to cost you $300. And AmeriHome is pricing at 6.5, but it's not going to cost you $300. Mm-hmm. Then I tell the client that. And they're like, what's the benefits? Well, I say, well, if you stay with New American Funding, we won't sell your note. We keep it. We service you. And there's that. And they say, yeah, but that I could save $300. And I'm like, yeah. And they're going to sell your loan off, but it's not going to affect you at all. You just save $300. And they're like, hey, in that case, I'll save $300. I don't, what I miss.
Got another approval.
Oh, cool.
Yeah, I should turn my email off when I'm here.
Yeah.
But anyway, what state are you in? We answered that one. Drew Denny. What do you make of the Okay, we got that one already.
Yeah.
How do you
the UWN news? Let's go on that for just a little bit. This guy came in and said he's a broker through and through, which I don't have a problem with. Brokers, direct lenders. I mean, you get one camp says, I'm better than the other, I'm better than the other. If you really understand the mortgage business, there's pros and cons to each. However, there's occasionally a dominant player that just starts to squash the competition. And that's what UWM is attempting to do. They're attempting to squash the competition. They're saying, hey, if you're going to have Coke in your outfit, you can't have Pepsi. And that's a problem. That's actually what's going on in this back office loan officer shit. It's kind of fun and juicy for loan officers, but not so much.
Jay Maldo, how do we get rid of PMI? Actually, you know what? Time for commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the number on the screen. But don't dial it right now because we won't answer. Wait till we're off the live and then we'll talk to you. Bye.
Screenshot it. All right. How do I get rid of PMI from an FHA loan after 20% equity?
That's beautiful. Jamaldo?
Yeah, 609.
609. Probably can't. I'm going to say probably because if you got your loan probably 15 years ago, maybe. But if you got your loan in the last 10 years, probably 10 years, right?
Yeah.
If you got your loan in 10 years and you only put 3.5% down, your MI's for the life of the loan. It does not go away. If you put 10% down, it will automatically fall off at 11 years. It doesn't matter how much more you put down. That's the rules of FHA. The only way is to refi, put it into a conventional, and then maybe, but you have to run the numbers because people think MI is horrible. And I'm going to tell you that MI isn't horrible. It's not horrible because the truth is it gets priced out. Well, what does that mean, Lee? Here's what it means. It means that if I priced you right now, today, and I got you an FHA 6%, 6%, FHA 6%. Sounds good, right? Cool. Then I priced conventional, your exact same file, and I got 6.5%. 6.5%. Sounds pretty good, right? No. Well, which would you go with? You would probably go with FHA right now. But then I told you, hey, wait a minute. I got to put in the mandatory MI, which is 0.55. So your 6% just went up to 6.55. Oh, wow. What's better now? Conventional. 6.5 to 6.55. And you're like, oh, in that case, I'm going to go conventional. Well, which one's better? There's another catch. FHA will let you go further on debt to income ratio. So you get more house if you go FHA. Which one's better? They're like neck and neck. All the time they're neck and neck. The only time that one is head and shoulders above the rest, like head and shoulders, not even close, is if you have an 800 FICO score. If you have an 800 FICO score, conventional wins hands down every single time.
All right, guys, there's a lot of questions here. We're going to get to every single one of you. Just hang tight. Don't leave. And next is laughing my ass off, not dog pound.
Not dog pound. I don't know what that means.
Riri, I don't remember. You were talking about something. What's up, Juan? Thank you for the love. Max Martinez, can I buy a house if I make $140,000 and have $20,000 in cash, have a 630 credit? Max.
Yeah.
All day long.
All day, air day. You're probably cracking 550 right now.
No.
Cracking 550. $550,000 purchase price, somewhere in that range. I have to see your back end ratio.
550 at $140,000 a year?
I have to see your
he's
back
higher
end.
than that.
You think so?
Yeah.
Yeah, you're right. Actually, you know what? I'm looking at it here. 580. Depending on your back end ratio and your property tax.
Yeah.
Your property tax is a big deal.
Riri, it was you doing all those love and hearts and likes and shares.
Appreciate you
Riri,
from Miami.
this one's for you.
From
This
Miami.
for you, Riri. And guys, help us get these likes up. Like, share. We want to try to get the algorithm out there. More people ask questions to help the whole community. Even if you're a loan officer, give us a scenario. We want to help everyone.
And quit giving us thumbs down on Instagram. Who's the hater who's giving us thumbs down? Somebody keeps giving me a thumbs down on Instagram.
I'll tell you what, man. I'll tell you what. Instagram. I'll tell you what. Facebook. I'll tell you what. YouTube. Google.
Don't forget
y'all,
TikTok.
No.
Oh.
They suck.
Oh, damn.
Compared to the love we get
Dude,
at TikTok.
damn.
Straight suck.
You won't do that.
Well, what are they going to do? Not give us any more viewers?
DSCR is only for non-primary homes, right? Right.
No, you can do primary.
Can you? Mm-hmm. All right, so DSCR means that when you rent it, you have to rent it to yourself. so that a debt services.
I see primary on my sheet.
Okay, all right. Let's make it work then.
Gelato, what's the house hack play of 2024?
Okay, so gelato. Here's the house hack. This is kind of tough, though. It's kind of tough. It's hard to find the scenario. That's why. If you can find that four unit, and we can make the numbers work where you pay the first unit, but it's over 25% of the note. That's the catch. Over 25% of the note. And we use the other three in order to up your income. A year later, when you move out of that, that house will have appreciated. You will have got in for 3.5% down, and you can either sell it for the profit or put more renters in there and keep the stream of income coming. That's the hack.
Riri, coming with the knowledge. The more likes you have, the more TikTok pushes your live to viewers. I love it, Riri.
Oh, thank you.
Yes,
Thank you, Riri. We need to hire you. We don't have no money for
Actually,
it, but we want to hire you.
I'm going to give you a couple seconds to screenshot this. I want you to text one of this when we're done, Riri. We need a copy of your business card because I think we need to build a relationship if you're a badass realtor.
Yeah, we want to promote you. We try and work with realtors. By the way, for those of you watching, you need a great realtor. You need a great realtor. We've seen bad things happen with not a great realtor. And we work really hard. If you're brand new, I'm cool with that as long as you have a good mentor. I've worked with a lot of brand new realtors that have a good mentor. And they're like, hey, I don't know what to do. And I'm like, I'm a loan officer. I can't advise you. I actually have a real estate license, but I can't advise you. Go to your broker and tell me what your broker says. And then tell me. And he'll call me and say, hey, this is what my broker said. I said, yeah, that's pretty smart. I would do what your broker says. And then they say, well, here's what my broker said. I'll tell him, did you tell him this part? No, let me go back. Oh, now that I told him he changed his advice, he does this. Yes, that's the advice we're looking for. So if you're a badass realtor, we want to work with you and promote you.
Luna and Bagheera coming with the knowledge. Said the same thing. It pushes you out to the FYP page. Luna and Bagheera, this is for you.
FYP.
Yes, I love this. You guys can teach me about TikTok because I need to know. Drew Denny, what do you make of the UWM news?
There's a lot of people learning about that UWM news. Well, we don't deal with UWM. However, we have a really good loan officer friend who does work almost exclusively with UWM. And he funds a lot of loans. He funds pretty difficult loans. I would say if there's anybody in the business who can come close to our loan funding ability, it's this guy. And he works with UWM. And I'm like, I actually asked New American Funding, I said, why don't we work with UWM? They're like, we have our reasons, but we're just not. And I'm like, all right, whatever. I got all these others because we got a lot of them.
AW, yay, 3K, not a realtor, but a lender, but a single mom who wants to get educated on buying their first home.
AW, we want to help you. We want to help you. The most important thing that you control is your credit score. Yep. That credit score is not small. And you don't want to just get in where you're like, oh, 580, I can make it. No, it's a horrible loan. 620, I can make it. You want to be 800 FICO score. If you're at that, you own the road. You own the road. That's yours.
Baby GG out of here. Do I qualify if I am 1 year into my business, self-employed, but have filed taxes for previous years? Yeah, you speak too fast, man.
I might have been. Well, it depends. Did you file as a Schedule C or a Schedule A? If you filed that you were doing business, but you just incorporated for the first year, then maybe. The answer is maybe. But if it's your first year making money that way, probably not.
Yeah.
Probably not.
No, maybe. Daisy, what do I need to buy a house?
Oh, that's easy. You need down payment, good credit score, income. That's it. Get your house.
Call us, Daisy.
We're here for you.
Riri, proud of you, AW.
I appreciate you.
Marissa, that was good information about the car lease, but it's just a house lease. See, I know.
Oh, dude,
Not sure if it counts.
I went on this big old tangent.
Everyone got an education.
I want a big old tangent.
Everyone got an education. So let's answer this one.
Okay, go.
So if you have a house lease, the only challenge is you might have to owe that money if you move out too early. But let me give you a little bit of advice. Your landlord doesn't care who lives there as long as that bill is paid every single month. So if your lease is a year long and you just got into it and you want to buy a house now, I would recommend you help him find someone to take over that lease. Because if you say, hey, landlord, I want to go buy a house, I want to move out, but this person wants to rent the house.
For hire.
Right behind me. Yeah, at whatever you're charging.
Yeah.
Because when you move out, the rent just does this.
Yeah. It goes
so
up.
he or she can actually make more money on that new lease. So if you help them find a person to replace yourself in that lease, you can probably break it.
And there might be a sublease provision in there where you can sublease to somebody else. So remember, everybody, it's all about money. People want money. They always want money. That's what it is.
Riri, who's Chris and who's Lee?
That's Chris. I'm Lee. Yeah, Chris and Lee. I know it's backwards on this thing.
Yeah, we should be sitting in different spots, actually.
Yeah.
But I'm comfortable here.
Yeah, me too.
When people shop around for a loan, does it affect their credit?
A little bit, but not as much as you would think. So, here's how it works. Let's say you have a loan officer pull your credit. There's this time frame, and it's arguable, depending on who you're listening to, between 15 and 45 days, somewhere in that range, where the CFPB, Consumer Financial Protection Bureau, says in order for these guys not to get taken advantage of, they need to shop for a loan. So, we don't drop your score as long as it doesn't get too ridiculous. What is too ridiculous? That also depends on who you're listening to. But kind of 3 or 4. If you have 2 pulls, probably no problem. 3, probably no problem. 4, here's why. Because it could be mortgage fraud. Because if you offer on a $500,000 house and this bank starts and this bank starts and this bank, and they all fund at the same time, they didn't know about it. None of them knew about it until it closed on the final day. That $500,000 house, you got $2 million, and then you run off to the Bahamas. Probably not the Bahamas because we can get you.
Yeah,
but,
probably.
but you know,
Belize?
Yeah, Belize maybe. Yeah.
Non-extraditional property?
Yeah.
I mean, whatever.
Yeah.
All right, health insurance. How do you get your mortgage lower if you already have one? Is that payment or is that balance?
How do you get your mortgage lower? How do you get your mortgage lower? Talking about your payment, or the aggregate balance? Because the aggregate balance is simple. Pay it down. You got to put money into it. But if
Let's give them both answers.
Okay, cool. So put a lot of money into it or refinance at a lower rate. What if we don't have lower rates? Then you can't do it. It's going to be a higher rate. So it's just math. It's math.
Also, on the first one, if you're paying down your balance, if you make a mortgage payment, just a regular mortgage payment, and then you make another payment on top of that for just principal,
make sure it
not
says
interest. Make sure, you gotta let them know because they're jerks like that. You can actually pay that thing down super fast.
Yep.
Super fast. I mean, cut it in half, cut it in thirds, whatever you want, depending on how much. And if you need help with that math, give us a call. Vivman, thank you for the love. Health insurance, thank you for the love. Tammy, thank you. Val, thank you. Marissa, can you help in AZ?
Yes, we can. AZ, all 50 states, and AZ is in those 50.
One of my favorite property tax states, by the way.
Why?
It's cheap.
How much is cheap?
0.7.
Really?
Yeah, in most places.
0.7.
What's California?
1.25 is a base, but it can go as high as shit.
What's Texas base?
Texas 1.9, no, 2.1 base. But I did a loan in Buda with 3.7 tax base. 3.7.
That's like 2 mortgage payments.
It's a lot of money.
Is it possible to get a loan making $54,000 a year with a credit score of 560 in New Jersey?
Probably not. Yeah, probably not. User 9392. We got to get that FICO score up because that 560 kills you. It hurts you bad. Because I'll tell you that the FHA minimum guideline is 580, but you did something to make that 560. You earned that 560. Now let's get past that and let's earn it up to a 600, 700, 800 FICO score and make it work. But I don't care about the stories. People are like, hey, you don't understand. Verizon did this to me and the electric company did that and the credit card. I don't give a shit what happened. I don't care. I don't care.
He doesn't care, guys.
I deal with where you're at and how to get better. I don't care how you got there. It's my divorce or it's this or these bad people. I don't care. Let's fix it. Let's get you a house. That's all I look at.
And if you guys know you have crap credit and you need to get it fixed, just go to the link in our bio.
Dude, crap credit. Can you be nicer to the people?
If you guys have shitty credit, just go to the link in the bio and click on Fix My Credit. We all know. I've had shitty credit. I've had probably the worst than all you guys. I promise you. And I went to credit repair, and I'm great now. So,
well, I did this.
It happened to you too.
Here. This many years ago, I was in the Navy. I was in San Diego, and I had an electric bill. And when I moved out, I left back to Santa Fe, New Mexico, where I was raised at. And I left, and I owed them $330. And I said, "What are you gonna do? Chase me?" Yeah, that was stupid. That was really because I was.
Were you by yourself, or was there people watching you?
I was a gangster.
Was there people watching you?
I was a gangster. So anyway, $330. 20 years later, I moved back to California. It's already fallen off my credit report. Everything. I moved back. I rent a house. I'm like, hey, Mr. Electric Company, I'd like to start an account. They're like, hey, we remember you. Yeah, we remember you. Yeah. You walked out on our bill. You did. And I'm older now and smarter, and I'll pay it. They're like, yeah, but we know what you'll do. And because of that, we want an $1,800 deposit that after 1 year of paying everything on time, we'll give it back to you. I had to do that. Why? Because I screwed over the electric company, kind of, and they got back at me. That's just life. It happens. So let's get over it. We'll fix it. We'll move forward.
Oh, man. Maddie Boo, my third favorite Maddie. My partner and I have a combined income of $150,900 debt FHA approval. Is that possible? His score is 650 minus 700.
Not only dude, Maddie Boo.
My third favorite Maddie.
You should be in escrow today. Like today. That kind of income, your credit scores, if your husband, partner, okay, I don't know if it's partner or husband, but partner, whoever, I don't care. But if you're legally married, we can do something called blended credit, which means we don't have to take the lower of the two. We blend the credit and we come up with a better FICO score. So that's a thing. If you're not legally married, then we take the lower of the two. But any of those scenarios, yes, you should be in escrow tonight. Call Chris.
And you're only my third favorite because my daughter's my number one, and there's another Maddie before you. So you're my third. Who cares?
Okay, cool.
Diana, what if you suggest I have $50,000 down and a great credit score, no debt, but only make $50,000 per year?
Well, I would suggest you get qualified today, and it's also going to depend on where you live. Because if you live in Los Angeles, $50,000 a year is not going to get you a house. You're just not. You can't afford a house at $50,000 a year. But if you live in Mena, Arkansas, or Buda, Texas, or I don't know, name a city.
Compton, California.
No, you can't afford a home in Compton, California. Not 50 G's. No.
Illinois, anywhere in Illinois.
Anywhere in Illinois.
Except Chicago.
So that can work. I suggest we pull your credit, build your file, and let you know exactly where you're at.
Okay, TikTok user, should I buy a car before a home?
No.
Well,
if you have the opportunity
to get to work, man.
If you have the opportunity to not buy a car before a home, buy the home first, then buy the car. You're still going to make the same amount of payments, but you'll qualify for a house way easier with less monthly payments.
X-Station 21, Dakota Prescott, giving me advice on mortgages during the NFL off-season.
Yes, you already said that. You said that 2 or 3 lives in a row now.
And I've also said this with our 1-star rating. Yeah,
1-star rating.
It's tough. Wanda, yo!
What's up, Wanda? Yo.
MC23, UWM is the only competitive first-time home buyers in this market.
Not entirely
incorrect.
True. Not entirely true. UWM is a competitor. They're out there. No doubt. They fund loans. No doubt. But if they were the only competitor in the market, you wouldn't be talking to us with 17 followers saying that.
We got a hater, bro.
Oh, dude, here we go.
Did you break 100 million last year?
Oh, check that. I can tell you that New American Funding did. If you're talking about UM. Yeah. I can tell you the New American Funding did. I promise you that. Man. Yeah, all 50 states, we're good to go. I understand. I appreciate you haters. I do.
I love you guys. Without you guys, we wouldn't have all these viewers.
If I buy my first home in my business name, does it have to be commercial 25% down?
Negative 25% down.
Negative 25% down. If I buy my first home in my business name, well, first off, if you buy it in your business name, you're not going to get a VA, FHA, Fannie Mae, Freddie Mac, or USDA loan. That's it. Forget conventional conforming. It's off the table, which means you're either going alt QM or business loans. So probably yes.
AW, thanks for that. 95 income, 983 months. Huh?
Let's do it. AW, 95 income tells me that we could do 983, I don't know what that means, 983 months, 983 months?
Clarify,
right, cool.
AW.
Appreciate you.
Matty Boo, we already answered that one.
Yep.
Sorry, $983 a month. 5K down, but 604 score. Working on getting it up. 700.
We can help you, AW. We're going to help you. We're going to get you a house. No doubt about it.
Yep. Elite. Josh, what's the highest credit score? Always 800 and above?
No. So there's 2 big credit reporting agencies. There's FICO and Vantage. There's a few others, but FICO and Vantage. FICO goes up to 850. Rarely will you see an 850. The highest I've ever seen is 846. That's the highest I've ever seen, and I've been pulling credit for 20 years. The highest I've ever seen is 846. I've never seen a perfect 850 across all three bureaus. By the way, the 846 did have one 850, but it had an 844 and an 846. So 846 is the mid. So Vantage is another one, and Vantage used to go up to 900. However, Vantage has now mirrored FICO, and there's rumors that the mortgage industry is going to flip to Vantage in 25. There's rumors for that. Now, inside of these different credit reporting agencies, there's different algorithms. Like we do, like the mortgage industry uses FICO 5, right? FICO 5?
Yep.
FICO 5. So there's FICO 3, FICO 5, FICO 7. There's a whole bunch of them, and they're for the different industries. And even inside of that, there's more slice-it-ups. But if you're going for a mortgage, the only way to really know what your score is, have a licensed loan officer pull it, and then take the mid of the tri-merge.
Hey guys, got a lot of questions. We're going to get to every single one of you, but it's time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee at New American Funding, by calling the numbers on the screen. Don't call right now because we're live and we will not answer. However, once we're done with live, we'll answer our call. Bye.
Hasta la vista. Marissa, what's the down payment for a DSCR, bro?
20%.
Damn.
20%. You can get away with 15 on very few occasions, but 20% is the simple rule.
Health insurance says monthly payment. I don't know what that means.
I don't know either.
RMZ, Karen, if FHA assistance credit score
Varies between states. Varies. Okay, go. Is FHA assistance credit scores. Okay, so what you're saying is down payment assistance and FHA. So the credit score is across the nation, and FHA guidelines are across the nation. However, the down payment assistance programs are state and county and sometimes city. State, county, and city. So in California, I have CalHAFA, but I can't use CalHAFA in Texas or New Jersey. I can't use it. Why? Because CalHAFA is for the state of California, and there's some other. Now, Riverside has a Riverside project. And if you go to Travis County, which is in Texas, has a certain program. It depends on where you're at. So the programs vary by location. The FHA guidelines are across the nation, and the FICO scores across the nation.
Dude, you got another nice shirt.
Dude, I got another nice ones. Yeah,
someone said it.
I appreciate you. Nice shirt.
We'll get to it, though.
Thank you very much. I
got a lot of questions, guys.
I'm not kidding. I go through the comments, and there's some people who hate my shirt. So anytime you say thank you, nice shirt, I appreciate you.
I live in California, but have no debt. She be vibing. That's good for you. She be vibing.
Good for you.
Michaela Ferreira, 481, 250 combined income. Fantastic. 1,500 debt, 690 credit score.
You're cracking $1 million, man.
Easy.
250? Yeah, 250. Now, here's the catch, and I run into this a lot. FHA has guidelines, and there's a max amount. The max amount in San Bernardino County and Riverside County is $644,900, right? $644,900?
Yeah.
So $644,000.
Just 644.
644. Okay, so the conventional loan limits go up to 766. Now, if you go to LA will take you to $1 million. 1.1 million. So if you earn that kind of money, so there's a next thing you have to do, because you can't break out of conventional conforming limits. There's conventional conforming, which is for most people that are buying a house. Mm-hmm. There's just this tiny little segment called high balance. Mm-hmm. High balance isn't everywhere, but it's in most places. Mm-hmm. And then right above high balance is jumbo. Once you get into jumbo, it's a very scary territory because you're going to need 20% down. Most jumbo loans, 20% down. There's some programs where you can do an 80-10-10, which means you borrow 10%, you put 10% down, and then you borrow 80%. So that's an 80-10-10. There's different ways to slice that up. But if you can go conventional conforming, 3.5%, 3%, or 5%.
All of you that are giving the likes, we're at 10,200.
I appreciate
See
you.
if we can get that to 15 G's.
Thank you.
Got about 10 minutes. Let's see if we can get to 15 G's.
Dude, you guys are badass.
J Maldo 609. My wife has a mortgage and our home now $100K in equity. Want to rent it out, but want to take the money out.
All right.
4 down payment for next home. How?
Okay, so there's a couple ways. First way is HELOC. That's home equity line of credit. You're going to have certain limits on it, and HELOCs are not cheap. The interest rates are kind of high. So that's one way. There's another way, second mortgage. Second mortgage means, hey, here's my first mortgage, and I have a second. And the second is doing 15 years, and I make payments on it till it's paid off in 15 years. That's second mortgage. What's the difference between that and a HELOC? HELOC's like a credit card. You pull money out, pay it back, pull money out, pay it back, pull money out. Line of credit. Cool. So that's the difference between a second mortgage and a HELOC. The third way is cash out refinance. We take the money that you owe, roll it up into a new loan, give you the remainder, and then you move forward. That's usually not advised if you have a very low interest rate. If you have a very low interest rate, you want to keep that low interest rate. So we have to run numbers. It's a lot of number running in order to make that happen.
Okay. Oh, graduating college in a month with a first job starting. Can I qualify once I start a job? 750 score, 50K saved.
Oh, you're my favorite. You're my favorite kind of borrower.
That's a good one.
Yeah, you're my favorite. Because as long as you graduate, and you graduate with a degree, certificate, or whatever your profession gives, and you go into that same line of work, I get to use that all that time in education as time in service. I can do it with 1 month on the job. 1 month on the job. All I got to do is figure out your new income. Say, hey, I've been in school for this the whole time. I do this for nurses often. So nurses come out of school, they come out, they get $150,000 jobs. There's some good money in nursing. So $150,000 job, they're like, hey, I've only been working here 2 months. That's all I need. As long as you got your degree or certificate, let's go.
More people need to know. Oh, tell your friends.
Yep.
They can buy houses. Sunshine, thank you for the love. Rochelle, thank you for the love.
Appreciate you.
RSJR79. What are the chances of getting a mortgage 2 years after a BK7 discharge with current market?
It depends. RJR79. 2 years BK7. So 2 years BK7. BK7 means I walked away from everything. I said, screw it.
Peace out.
There's only one loan you qualify for. Actually, two, but one of them you have to be a veteran. So if you served our country and you got an honorable discharge, you can probably get a VA loan 2 years out of a discharge. The other one is FHA loan, 2 years out of a discharge. However, they are going to still look at a lot of factors because after a BK7, your score automatically goes up. But how did you deal with your debt after that? If you dealt with it not so good, you're probably not going to get a loan. If you were late on certain things after a BK, the underwriter is going to go, hey, listen, this guy walked away from everything 2 years ago, and then people trusted him with credit again, and he has 2 30-day lates in the last month. Nope, not happening. So it's going to depend how you dealt with your financial situation after the BK. But 2 years, FHA, if you did it correctly, chances are very good.
Jay Maldo said, I don't have a mortgage under my name. He's the one that was up top, had said his wife had a mortgage, wanted to take money out. Is a good idea. How do you do it? So I'm going to answer it, and I'm going to say that's actually not a bad strategy now that you say that because you currently don't have a mortgage. I'm going to recommend you call us. We'll walk you down the path. Okay, so, should I talk to you guys before paying off car?
We already did that. You jumped to
the
the top. Yeah, you got to come way down. Dude, talk. We can't live. We can't go dark.
No, our fans love us.
Okay, cool.
How can I buy a house? 812 credit, 80K a year, first time home buyer in California, no debt, 10K down.
You call us, She Be Vibin'. We'll have you qualified as long as you give us all the documents. What's today? Friday. We'll have you qualified by Monday, unless you want to go in escrow tonight. In which case, we'll work till midnight to get you qualified. So you'll get rolling. Yeah,
Marissa, probably missed your answer. Can I buy a duplex, triplex for a primary home if I already have a primary?
Maybe. So if you have a primary and you have been there over a year, and then you move to a new primary, then that's your new primary. So that new primary triggers loans. Now, as long as there's not an FHA loan on the other property and it's a conventional loan, you might be able to go FHA. Might be, because there's an acid test on FHA. You might be able to go Fannie Mae, Freddie Mac, 5% down with a 3-unit. As long as you rent out the other 2 units and you live in the biggest unit. That's the guidelines. Now, there is a little bit of there's an overlay on it. Some loan officers are shooting going, you can't do that. Yes, you can. You have to on a 4-unit, you have to pay more than 25%. On a 3-unit, you have to pay more than 33%. It's pretty simple acid test. But as long as you pass that acid test, you're good to go.
Sandra, question. We got pre-approved, but interest rate is at 6.5. Is there a better rate?
Sandra, maybe. Depends on what your FICO score is. Because like if you went to New American Funding right now, like you went up to our links and you went, hey, cool stuff. You click the cool stuff link. It says cool stuff. And then today's rates. And you would see 5.75. on an FHA. You would see 5.75 on a VA. That's not my quote to you, by the way. That's New American Funding, what they're putting out on the website. The only way I can give you a quote is if I pull your credit. Yes, I would have to pull your credit. Even if another loan officer did it, I still have to pull your credit. If I pull your credit, calculate your income, calculate your assets, and build your file, and then I can give you a quote.
There you go. Michael Ferrara, 250K combined income, 1,500 monthly debt, 50K down, 690 credits.
250K, dude. We get some high earners on this one.
Shot
We got some. That's your million.
20-inch
You're at a
rim.
million plus.
Yeah, easy.
You're at a million plus. Yeah.
There he is.
Daniel, nice shirt. Appreciate you, Daniel. Thank you very much. Thank you.
Many
Thank
of
you,
us
thank you.
disagree, but thank you,
He
Daniel.
disagrees. Yeah.
MC23, 600K income, 1,500 monthly debt, 662 credit score.
600K income.
Yeah,
That's
he's the loan
that's
officer.
he's the loan officer.
Yeah.
Yeah.
So if you make that much money, why do you
Yeah,
care about our
what? You don't
production?
need. Yeah, you don't need us. 600K. Come on, LO. You know you can do a jumbo loan at 600K as long as that 600K is net. If it's gross, it does not matter. You know that. But your 662 is going to forbid you from a jumbo loan because jumbos start at 680 even at UWM.
Sandra, would you recommend JG Wentworth?
Cute. He's
that
an
the
investment
insurance?
advisor. That's an old school thing. JG Wentworth
Oh,
is
you're
an investment
showing.
advisor. Yeah,
Okay.
flex. They're flexing. Yeah.
Sandra, is 6.5 high?
6.5. It depends.
Relative.
It's relative. So here's the thing, Sandra. I want you to think about this because this is very important because you're not making a decision for now. You're making a decision for the next 30 years. So Sandra, come in closer. We're about to talk to you for a second.
Intimate.
Okay. Now, 6.5 is relative high. Here's why. Because almost all loan officers are going to give you somewhere in that range right now. 6.25 all the way up to 6.85. That's kind of the market these days. You can break down into the sixes, even fives, but you're buying it down. So here's the thing. It's not a question of whether you're going to refinance. You can take that out, Sandra. That's not what it's going to be. You are going to refinance. You're going to. And if you have a good loan officer who's going to teach you how to do this, you're going to do it one time, you're going to do it right, and then you're going to stick. And let me tell you what that means. So, here's what the chairman of the Federal Reserve is saying. Chairman of the Federal Reserve is Jerome Powell. That's him right there. And currently, interest rates or the prime Fed funds rate is at 5.25 and 5.5. That's what it's at. All 12 Fed members believe it should be there. But if you go into 25, 26, and even into 27, all 5 of them come back into consensus at 2.5 Fed funds rate in late 26, early 27. So we're in 24 right now. 26 is 2 years from now. 27 is 3 years from now, which means the interest rates are going to go down, 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 down. Now, if you have an unscrupulous loan officer, he's going to try and make a $5,000 to $15,000 commission every time the rates go down 50 to 100 basis points. He's going to be going, hey, listen, I think we should refinance now. I think it's a good idea. And it'll make sense in the numbers. It will make sense. And then next time he does it, it will make sense again. And the next time he does it, it will make sense again. And if you do it 3 or 4 times over the next 3 years, each time it will make sense. But when you look back on it, you will have spent $3,000 to $5,000 on every one of those refinances. Why? Because that loan officer has to make money. So you will have spent $5,000 times 4 refinances, 20 grand, and restarted your 30-year clock over every single time. But if you've got someone who will actually give you the facts, and by the way, these are my facts. This is FOMC website. You can go to the Fair Open Markets Committee, and the chairman of the FOMC is Jerome Powell. There are 12 members, and this is what they are saying is going to happen in 25 and 26, and around about 27, they come to consensus at 2.5% rate. That's the Fed funds rate, which means rates are going to go down. We strongly believe that. We strongly believe that. So, when you get 6.5, don't think that's what you're locked in forever. And don't spend the money to buy it down. Certain occasions where it would work, I'd have to know your scenario. But for most people, don't spend the money to buy it down because it's not a matter of will I refinance. It's a matter of when I refinance. And then if you have somebody who actually understands the markets and will show you this, you plan for the refinance, and then you buy it down as deep as you possibly can. You spend as much money as you possibly can. Because if we're at 2.5 and the bond yield is what the mortgage rates are based off of. It usually runs 100 to 150 basis points above the prime, which means 2.5 will put us at about 4.5. Somewhere in that range is what the interest rates will be at. Then you have the ability to buy into 3 and maybe even 2, and then lock it in and never refinance. And that's how you gain the bank.
Okay, think about this question. You got to make it fast. What are
Cool.
the key questions to ask when choosing a loan officer? I meet one Monday. Those of you that are interested in talking to us, I'm going to give you a couple of seconds to screenshot this and leads on in 3, 2, 1.
Okay, cool. So if you're picking a loan officer, this is a very important decision. Very important. Because you don't go out for the guy who's good looking or has a nice shirt. None of that
counts us both out.
None of that counts. No. You need somebody who's actually been in the business for a long time and understands the different scenarios and doesn't have to keep going, well, let me consult the guidelines. Let me talk with my manager and see if that can be done. I've never heard that can be done before. Why? Because if you do a lot of loans, you kind of know the shit off the top of your head. It's not even brain surgery after you've done a lot of it. It's like a skilled surgeon. If after he's done enough surgeries, he's just good. He's just good. Because the bad ones will be filtered out through the market. You know why? If I screw up a loan for a realtor, that realtor will never use me again. Never. You know how much balls it takes to come on live and bring up the guidelines when I know the LOs are coming at me? I better really know my shit. So what you're looking for is somebody who knows the guidelines like off the top of your head. Bring up some of the stuff I'm talking about. Bring it up and hit them with that. Because if they actually know it, they're not afraid to say it, and they're not constantly saying, hey, let me consult with my manager. Let me check with the guidelines. Oh, they must have changed in the last day or two. They do change, but not like that. They change like, it's tiny little stuff in the background. So what you should be finding out is how long have you been doing, how many loans have you funded, and then check their customer service reviews. If they actually have good customer service reviews, that's a big one right there. Because the market weeds out the bad people. The bad people. Cool.
There it is. I'm Chris.
Okay.
That's Lee.
We've been Chris and Lee. We appreciate you.
Happy Friday, y'all.